Abhijit sir, very good evening, sir.
Good evening, thank you.
Pleasure
Good
to be
evening,
here.
Audit, sir.
Doing good, sir. Great.
Yes.
Kishore sir, it's exactly 5 o'clock.
Yes, sir.
How many members are there in Vijayawada branch?
1300, sir. Around 1300.
Very good.
And for this seminar, around 330, which is the limit, approved limit, have registered for the program, sir. They will join maybe in some 5 or 6 minutes, but it's 5 o'clock and we will start punctually at 5 o'clock. So I welcome all of you to this series of sessions on bank audit. And our past chairman, Godwa Srinivas Rao, has termed it or titled it as a kickstart to bank audit. Today we have chief guest, Chairman SIRC and also ex-officio of Vijayawada branch, CA T. Chinnamastan sir. We are also joined by CA Amarjit Chopra sir, who is the past president of ICA. He will be taking up the keynote address for this session, as well as we are also joined by our resource person, CA Abhijit Sangri sir. He has also joined. Once we finish the address by the chief guest and the keynote address by our honorable president, we will hand over the session to the technical resource person, CA Abhijit sir. Right. So before we commence our program, we will start with our motto song. As a mark of respect, we can place our hand on our heart. And we need not stand.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः
Kishore sir,
Yes, sir.
that has been, volume has been load up or squeezed,
yes.
I think.
Yes, yes, sir. So I request our chairperson, CA Gedam Sita Shireen, to give her opening remarks.
Respected Chief Guest of the Day, Chairman of SIRC of ICA, CA T. Chinnamastan sir, and today's special invitee and the Honorable Past President ICA, CA Amarjit Chopra sir, and today's resource person, CA Abhijit Sanjgiri sir, and my colleagues in the management committee and past chairman of the branch and fellow members, a very good evening to one and all. First of all, I would like to say very thanks to all the delegates and resource persons for their for accepting their invitation in spite of their busy schedule. And I would also like to thanks to all the members for the overwhelming response received, given to this virtual series of series on bank audit seminar. As we crossed 330 registrations, which is maximum size for any VCM, and yesterday only we stopped our payment link. And also, I'm very happy to mention here that this month we have celebrated Women's Day on March 10 with empowered women speakers who in different fields. And also, we have organized an articles placement program under the guidelines and initiative of SIRC. We have received a lot of positive feedbacks from the members as well as the students for that program. And also in coming week, we are going to launch mega medical camp in association with Topstar Hospitals, under which that hospital agree to give a comprehensive health checkup to all the members and their families and the friend and the staff of their members at the concessional rate of 1500. I request all the members to avail this facility. And also, we are going to conduct DISA course, FAFT, and concurrent audit in due course. And we have received a very good responses in very short time through Google Form we have released. And I request all the members to give your consent. Once the minimum batch is reached, we will start taking action on that part. And also, I appeal to give the consent to all the members about these courses. And coming to bank audit, as you all know, statutory audit is area where it is having high remuneration and large scope of audit, and the time period which will be allotted will be very less. And moreover, banking sector is exposed to various risks like increasing NPS, frauds, and post-COVID situation factors. And we are also assigned the duty to safeguard the public money. So definitely the risk quotient will be very high and should be very conscious while doing bank audit. So we planned this series of virtual series on bank audit with eminent speakers who is having vast experience in bank audits. So I request all the members for your great participation. Thank you for this.
Yeah, thank you, madam, for those words. Now, may I request Vice Chairman of the branch, CA Narendra Babu, to say a few words about our Chief Guest of the day and SIRC Chairman and ex officio member of Vijayawada branch, CA T. Chinnamastan, sir.
Yes, sir. Yeah, I feel it's a great privilege to introduce Chinnamastan sir to our fraternity. CA Chinnamastan sir was born on 1st July. It is predetermined, his birth itself. He is the first person of SIRC. 1st July 1997, he born at that. It is also formally our institute also 1st July. We are celebrating every day institute on first day of the institute. And it's a great sir. And by academic qualification, he holds master degree in commerce. And by professional qualification, he is the FCA. And he is also ICAA. And his post-qualification courses in FAFT and certification courses are also anti-money laundering and arbitration, mediation and conciliation. And besides, he is also an insolvency professional confirmed by the Insolvency and Bankruptcy Board of India. He was also elected as a chairman of SIRC in the year of 22-23 at the 249th meeting of SIRC on 17 February 2022 at Chennai. And before, he is also last year he occupied 21-22 as a vice chairman of the SIRC. And in the year of he is continuously elected with 3 terms, 2016-19 and 19-22 and 22-25. In the year of 2016-19, he was also secretary of SIRC, and 18-19 served as the chairman of PDC. And in the capacity of CA firms and SMPs and member of the other committees during the year of 17-18 and 18-19. And 19-22, he was the chairman of PDC and Indirect Taxes Committee of SIRC of ICA, and the member of other committees and vice chairman of the 21-22. And in the current term, SIRC, by virtue of his, he is being chairman of SIRC, the 22-23, he heads all the executive committees and several other committees and the subcommittees of the SIRC. And prior entering into the SIRC, he is also managing committee member of the Hyderabad branch of SIRC between 2010 to 2016. He has also served as the treasurer of the Hyderabad branch to the consecutive 2 years, 2012 and 13 and 14. And he is also very passionate to profession. And He is also in expression of the intent to invent new ideas to offer to the members and the students of the CA professional fraternity. He is one of the very popular members amongst the professional, especially the younger members of the profession in career counseling and mentoring and advising on practical issues which are faced by the young members. He is also specialized in the field of advisory to the members of MEDGES and of the CA forms and networking, and he is most popular as a troubleshooter in professional fraternity in the area of bank audits. Okay, I think he is the right person to speak on bank audits, how to troubleshoot, how to face it also. With this brief introduction, now we are welcoming to the Vijayawada branch, sir, with the wholehearted.
What do you say, Chinnamastan sir?
Thank you, sir. Thank you, Narendra. I hope my voice is clear.
Yes, sir.
Yeah.
Please
Yes.
go on.
Yes, sir. So our past president of ICA, CA, Amarjit Chopraji, and the chairperson of Vijayawada branch, Sreta Shirin Garu, and the vice chairman Narendra Babu, secretary Ravikishore Garu, treasurer Narayan Garu, and SIKASA chairman Dr. Subbarao Garu, and Pavan, and past chairman JSR Garu, and the other past chairmen and the speaker Abhijit sir, and members of Vijayawada branch and other branches. Very good evening to all. I'm extremely pleased to be with our distinguished past president CA Amrajit Chopraji and his excellence personality in the fields of bank audit, who have made immensely contributed and shared their knowledge and wisdom to our professional fraternity over the years for the overall development of our profession.
We had an issue of connection with Chinnamastan sir. Sir, GSR Garu, in the meantime, can you say a few words about how this program has been planned? Please unmute and speak, sir.
Thank you, sir. Thank you very much. Friends, respected Honorable past President Amarjit Chopra sir, and my colleague, all the management committee members of Vijayawada branch, Abhijit sir. Sir, this bank audit is planned in such a way that it should be guided to the young chartered accountants.
Yeah, Chinnamastan sir has joined, sir.
To start the practice or who are doing the first time audit, because sir came now.
GSR Garu, Chinnamastan sir
What are
has
the
joined.
records that he has to verify, and what is
Sir, my voice
the
is clear,
documents
sir.
that he has to?
Yes, sir.
Yes,
You
sir.
can
Perfect,
go, sir.
sir. Please go on, sir.
Right. Thank you.
Perfect, sir. Go on, sir.
Some technical glitches at your end, sir.
Yes, sir. Members, very sorry this was disconnected. Apologies to all of you. I was informed very recently that Amrit sir is pursuing a PhD course, and it is a matter of proud and brings to inspiration to all of us. He is occupied with some Viva programs during the first week of February, but still he has allotted his precious time to the SIRC seminar on Bank Central Auditors Program. It is addressed by members and large participation. And I, as SIRC chairman, I am very thankful, sir, for attending and addressing the seminars. Members, I am very happy. The Vijayawada branch is conducting 4-day series of program on bank audit. This is the only one branch in the southern part conducting 4 days program on the bank branch audits. Amrit Chopra sir, this is the branch has got the best award from the last 2 years at national as well as the regional level. At the same time, this is the only one branch conducting the MC members, electing the MC members through the election process in the southern region, except Hyderabad, including the big branches like Bangalore, has got the MC members without any elections. It's okay, sir, my voice?
Yes, sir.
That's absolutely okay.
Please go on, sir.
Bit breaking, sir, but okay.
Yes, sir. I'm getting voice?
Yes, sir.
Yes, yes, yes.
Okay. Sir, then you can give me 5 minutes, sir. Let Amrit Chopra sir will continue.
I'm afraid we have an
Definitely,
issue
sir.
with
There is a problem with
Chinmastan,
the
sir.
Chinmastan sir end, and continue the further proceedings. Then whenever he joined, we will continue.
Yeah, Vice Chairman sir, we will do that. My dear friends, CA Amarjit Chopra ji was born in 1952, and he did his graduation and post-graduation from Delhi University in the year 71 and 73 respectively. He was qualified as a chartered accountant in the year 75 and has been in the profession for a period of more than 46 years. He is a senior partner in GSA and Associates LLP, New Delhi. He was also engaged in teaching at a Deshbandhu Evening College, a Delhi University maintained college, for nearly 23 years. He was elected to the Northern India Regional Council of ICA for 2 terms and was its chairman in the year 1988-89. He was elected to the Central Council for 5 consecutive terms of 3 years each, beginning from 1998 to 2013. And he was elected as president of ICA for the year 2010-11. Prior to that, he was vice president a year before him being elected as president. During his term at the council, he was a member of various standing and non-standing committees of ICA, has chaired some of the most significant committees, namely Accounting Standards Board, Auditing and Assurance Standards Board, Financial Reporting Review Board, Corporate Laws Committees, among others. He was nominated by Government of India on the board of Bank of Baroda for the term 2006 to 2009 and on Indian Bank for the term 2011 to 2014. He was also nominated by central government as chairman of National Advisory Committee on Accounting Standards for a period of 4 years from 2014 to 2018. During his tenure, Ind AS as equivalent to IFRS was introduced in our country. As Chairman Accounting Standards Board of ICA, he has introduced IFRS certificate course and organized and participated in IFRS training programs in Middle East, Nepal, Bhutan, Myanmar, and India. He acted as a technical advisor to the International Auditing and Assurance Standard Board of IFAC during the year 2009-10. Also, he was a member of Professional Accountancy Organizing Development Committee of IFAC for a period of 3 years from 2011 to 14, and he was the vice chairman of the committee during 13-14. He has been conferred honorary membership by Australian Institute of Chartered Accountants, and he has also been conferred honorary life membership by International Association of Accountants, London. He is a prolific writer and a speaker and has delivered more than 3,000 lectures on matters of professional interest in India and abroad. He is on the board of Tata Power Delhi Distribution Company Limited, Tata Power Trading Company Limited, SBI Mutual Fund Trustees Company Private Limited, Rico Auto India Industries Limited, Roop Auto Limited, among others. He has keen interest in music and sports, particularly cricket. Sir, what to you, sir?
Thank you, Mr. Ravi Kishore. And of course, my greetings to the lady chairperson, Srita Shreen, and of course, the chairman of SIRC, Mr. Chinnamastan. And I can see Mr. Veera, Pawan Kumar, and other members here. My very sincere thanks to you all for providing today's opportunity. I think The SIRC chairman referred to my pursuing PhD course. I can only say that day, that particular lecture, which I could join for a very brief period, proved to be very lucky for me, because that day I was coming after my viva of the PhD, and later on my result has already come, and I have qualified to the doctorate degree from Jaipur. And my topic was, as the luck would have it, connected with the banking. It is NPA management in banks, comparison between public sector and private sector banks in India. So my study centered around this NPA management, which I may be talking to you in a brief time, basically, short time. You see, we all wait for January, February, March, and I think when February comes, we waited with the abated breath, if you really ask me, because we start expecting that whether the bank audit or the branch audit would come or would not come. I have seen members really craving for it, believe me. And I have always maintained, I think during my election period also, when I used to travel in my own region, I used to say, and I'm talking of almost 25 years back, that we cannot depend upon this branch audit for a very long time in any case. And I think my words are coming true, if you really ask me, because today is the situation when the RBI has not sent the panel to the various banks so far. We are still waiting for one thing, and that wait is whether the RBI is going to curtail the audit of advances from 90% of the bank's advances to 70%, or may retain it at 90% this year and may keep on curtailing it in the next year. And if they curtail these advances audit to about 70% this year, mark my words that 1/3 of the branches would go, and probably there would be hardly any vacancies in any of the banks so far as the branch audit is concerned. And I would also like to apprise you of one thing during the course of this keynote address. I think 2 audits you cannot depend upon for the purposes of your practice in the times to come. One is the bank branch audit and the other is the tax audit. And I'm not saying it today. I've been saying it for virtually 1.5 decades. I can tell you. The reason being that banks are all getting into the IT systems. So far, we have been able to get the branch audits under the plea. Whenever I used to go to meet the RBI officials earlier also, and today also, when I deal with them informally, not because I don't have the official capacity today to talk to them. Whenever I talk to them informally, I always say that you cannot compare the private sector bank's audit with the public sector bank's audit. The reason being, because RBI has been definitely contesting our claim with regard to the branch audit on one ground, that when it comes to the audit of ICICI, when it comes to the audit of HDFC, when it comes to the audit of Axis Bank or IDBI Bank, or any other private sector bank, at that particular point of time, none of the central auditor insists that the branch audit should be conducted. Neither the institute has actually fought the battle on that particular ground. And according to them, the fee of the private sector banks, the audit fee of the private sector banks, and that comparison is genuine, I can tell you that, is almost 1/20th or 1/15th of the total audit fee that they pay for the public sector banks. And this is primarily because of the fact that in the public sector banks, the fee for the branch audit is being paid by the various banks. Now, according to them, according to the ministry, according to IBA, according to Reserve Bank of India, is it the cost of the nationalization? One has been telling the RBI that you cannot compare public sector banks with the private sector banks simply for one reason. That in the case of the private sector banks, they are born in an era when the computerization was already there, the IT systems are already there. So all records are already computerized. They are on information system basis. Their all records, whether these are loan records or any other record, are all digitized, if you ask me. And the audit of those records can take place at the central level also. Whereas in the case of the public sector banks, there is no way that the audit of these documents can take place at the central level. The reason being that those records are actually not digitized even today. But I am sure, mark my words today, in the next 4 or 5 years, all those records are going to be digitized. And if these records get digitized, the branch audit would certainly go away even in the case of the public sector banks. Alternatively, what the RBI is, I think this is one of the thought processes probably at the RBI level, that they may ask the bank that if they wish that the branch audit is to be conducted in consultation with the central auditors of the bank, in that case, they may allot the branch audits. But RBI, according to me, according to the Reserve Bank of India, Reserve Bank is of the view that they, as regulator of the banking industry, should not come into play whether the audit is to be conducted or not to be conducted. It is up to the banks, and then RBI inspection, etc., would reveal what are the deficiencies in those audit systems. And if there are deficiencies, they may instruct the various banks accordingly, and the banks may act upon those advisories. This is one thing that you can take note of today. I think I give maximum a period of 5 years. You look at the tax audit in the case of the various banks. Tax audit, we could survive. I still remember in 2010, State Bank of India had actually issued a tender for the centralized tax audit. But at that particular point of time, Mr. Pankaj Jain was the PDC chairman and I was the president of the institute. We went, met the various authorities and told them that what is to be done, and we did a little bit of a sacrifice, and we agreed that in the case of State Bank of India, we will agree to a tax audit fee of 50% of what has been stipulated by the Reserve Bank of India. This was primarily with the reason that if SBI had withdrawn the tax audit at that particular point of time, all other banks would have withdrawn the tax audit at that particular point of time. Today, last 10 years, we have seen that the tax audit survived, but now, again, SBI has gone for the centralized tax audit, and certain other banks are going for the centralized tax audit, and probably the fee for the tax audit would also not be available to the branch auditors in the years to come. So at times you take decisions sitting over in the chair at the institute level, which will make sure that by making certain small sacrifices, you are able to protect the interest of the profession at large. But I can definitely say that it is at the back of my mind, at least, that the branch audits, as these are there today, may not remain for a very long time. There are reasons for it. One reason is, of course, computerization, or the you can say implementation of the various IT systems. Reserve Bank of India this year has told the banks that by 30th June of 21, the identification of the NPAs had to take place through the system. No identification of the NPA has to take place through on the manual basis. If it is done, in that case, very huge penalties would be imposed on those banks. And if you come across during the course of the audit this year that wherever the identification of NPA has taken place at the manual level, you may even write to the Reserve Bank of India. Let's be very clear about it. We as auditors should also perform our role. And if you ask me, and I think you would also agree with me, if not fully, partially, that some of us, I may not say majority of us, but some of us were definitely taking the branch audit as an annual ritual, which was an annual lottery or annual bonus, whatever way you can talk of. And that is what has damaged the profession to a very, very large extent. I can tell you that. And I know, having acted as the central auditor with a few of the firms from the Hyderabad itself, very frankly, what kind of reports, what kind of MOCs we used to get from the branch auditors. I don't want to blame anybody, because probably we have also been the branch auditors Certain other members have been also the branch auditors. I don't want to play the blame game. There's no way that I would like to do it. But I can certainly say that the reasons for the lesser branch audits are not to be, I think these are not far-fetched. And these we can see very clearly what is the writing on the wall, and probably we need to prepare ourselves in that particular direction. In the beginning, the organizer said that these programs are very essential from the viewpoint of the newcomers, basically, who may be doing the bank branch audit for the first time. Whatever I have been hearing for the last, if not 46 years, I have been 46 years in the profession, but I can definitely say whatever I have been hearing for the last 37, 38 years from the various branch auditors is that the bank managers or the bank authorities don't give them the enough time to conduct the audit. For that matter, I will only like to ask one simple question to ourselves. Who gives us the time to conduct the audit? Does the private client allow us the time to conduct the audit? I think you will all agree with me, even for the purposes of the tax audit, we have got sufficient time, 1st April onward, but on what date the client comes in our office? Most of the clients come to our office on the last day itself even. This does happen. We cannot actually shy away from this particular statement. We may try to, but I am very clear that all of us know heart to heart what happens. No client comes to me and tells me that you find my faults, basically. So even the branch manager has a right, there's no doubt, and he tries to see that he is able to send you back as early as possible. And he will keep on telling you, sir, I have to get the audit completed in the shortest possible time, whatever it is. Otherwise, my job is, I can tell you, when I was the central auditor of one of the banks, or rather, I have been the central auditor of 5 of the banks. In the various branch auditors meetings, I used to tell the branch auditors myself, whatever management may tell you, you take your own time for the purposes of the audit. A small branch will take about 3 to 5 days time. A medium-sized branch will take about 7 to 8 days or 9 days time. And a bigger branch may take 10 to 12 days time. And I'm very clear on one particular aspect that no branch, howsoever big it may be, will take more than 12 to 13 days or 12 to 14 days under any circumstances. If I know what the banking is, I think that's very important. I think we must accept one blame at our end, basically, that whenever we send the staff for the purpose of the branch audit, do we really prepare them for the purpose of the branch audit? In certain cases, the staff which has gone there for the purpose of branch audit may not even know what is the difference between the hypothecation and mortgage. They may not know even what is the letter of credit or letter of guarantee for that matter. It is, I don't think I'm exaggerating the facts. This is, sometimes a student in a lighter vein, I can say, when he starts getting the feel that cash credit, he says cash also, credit also, how it can happen, basically. But the matter is there that under a very good number of the staff members who go there, barring the chartered accountants who themselves go there, the staff may not be equipped to conduct the branch audit, very frankly. If my staff goes there and asks for a trial balance, the manager would know on the first day itself that this person does not know the banking at all. Because in the banking industry, there's nothing like trial balance, basically. There could be GL slip or there could be something else. But there's nothing like trial balance, which is called. At least this nomenclature is never used in the case of a particular banking industry. The point I am trying to drive you home is that somewhere or the other, we need to prepare our staff for the purpose of the bank audit. And one good thing about the bank branch audit is, whatever may be the size of the branch, if I know what the banking is, I will be able to conduct it in the given period of time. The reason being, banking industry is one industry. It is one kind of a business wherein certain returns emanate from the branch office go to their controlling offices, which could be regional offices, which could be zonal offices, which could be field offices. And from there, these go to the central office for the purpose of consolidation. And there is an MIS for virtually everything. When I am talking of these returns are for the purpose of the MIS. There are returns for the irregular accounts. There are returns for the NP accounts. There are returns for the purpose of devolved LCs. There are returns for the purpose of the invoked guarantees. There are returns for the purpose of if even the cash tokens are lost or any other pay order or check or anything is lost. For everything, there is a return. For inoperative accounts, even for the upgraded accounts from the NPA, there is a return, basically. The only thing is, first, I must know what kind of returns are being generated from the system. And if I know these systems, what is the parameterization of the system and how these returns are being generated from the system, and if I know these returns are there, I will be able to conduct the audit smoothly, efficiently, effectively. Mark my words to that. Why I say so? You see, if there is a return with regard to the irregular advances, take the case, if there is an irregular advance on 31st of December, and this return has to go. There is no denial of that particular fact that this return has to go. Now, if there is an irregular advance on 31st of December, or say only that account can become NPA post 31st of December up to 31st of March, barring the cases where a fraud has been committed or there is an erosion in the security value, basically, and that security, the erosion in the security value or a fraud takes place post 31st December, because the 90 days period overdue would be completed only in such cases where the account was actually irregular as on 31st of December. If the account became irregular on 2nd of December, 90 days period would not be completed. The account cannot be classified as NPA in those cases. So what is important is, in these cases, I will go and find out what is the return for your irregular advances on 31st of December. And out of that, suppose there were 12 accounts which are irregular on 31st of December. But if 3 of those accounts have already been classified as NPA, in that particular case, I am only supposed to look at, with regard to these 3 accounts, only with regard to the date of the NPA, with regard to the security which this NPA account has got, or the valuation reports, etc. of the securities. That is primarily, and the reversal of the interest in such cases. But with regard to the 9 cases which have become regular out of the irregular accounts, I think I have a tremendous role to play. I have a tremendous duty to perform. And what is that duty? The duty is primarily to make sure how these accounts have been upgraded, under what circumstances these accounts have been upgraded. Those vouchers, I will definitely get. I will ask them to produce me those vouchers on which date these accounts have been actually treated to be regularized. And there could be cases that you can find out that the payment has come from the same branch from another account to this particular account. If those 2 accounts have been dealing with each other, even otherwise, no issue, very frankly. But if this is one-off transaction, mark my words that this is an account which has been regularized by by debiting one account and crediting the other account. If I'm auditing State Bank of India and the payment has come from PNB, I'm not a Sherlock Holmes that I will go after this particular account wearing a hat and black glasses as to how this payment has come from PNB. I'm not too worried about it. But if the payment is coming from the same branch, I think I'm to be bothered about it under all circumstances, and I should be looking at it. I think this is one of the hallmarks. So what is important, because the circular of the master circular of the Reserve Bank of India, even if you read for the 1st October circular, 1st October 2021 circular, it very clearly says, you cannot regularize an account out of your own funds. When I say out of your own funds, that is the bank's funds. You can regularize the account out of the funds of the party. You cannot regularize the funds, you cannot regularize an account out of the funds of the same branch, of the same bank. There's no way that you can do it. And if you have done it, in that case, the account will still be treated as NPA. So what I'm trying to say is, I need to understand what kind of returns are being sent. If you are able to come across a return of a fraud, which is sent by the branch to the controlling office, if at all a fraud occurs, in that case, you know what kind of provision is to be created in respect thereof. Whereas in the case of a substandard account, a much lower provision has to be created. But if it's a case of a fraud, in that case, a much higher provision is to be created. You will have a return as to how many accounts have been referred to the NCLT. Now, wherever the accounts have been referred to NCLT, a minimum provision has to be created, which is much higher than the provision of the substandard, or even in certain cases, the provision with regard to the doubtful assets in those cases. So what one is trying to tell you, what one is trying to convey to you is that we must try to lay our hands on the various returns. Now, take the case of the inoperative accounts. The moment an inoperative account becomes operative, there is a return for it. And if you come across a return with regard to the inoperative account becoming operative, one thing that you have to notice is, one thing that you have to actually find out is, who authorized it? It has to be the next authority. It cannot be the same authority who, if I'm supposed, you can say deputy manager is supposed to operate a particular account. But if it is inoperative to become operative, in that case, it is not the deputy manager, it will be the manager basically who has to authorize this. And you may be able to lay your hands on some of the fraud which have happened, particularly in the NRI accounts, which have been stagnant, or some of the saving bank accounts which have not been operated for 3 years or 4 years or 5 years. Probably all those things you can find out what is happening in those cases. So what one is trying to tell you is, please look at the kind of returns which are to be generated and which are being generated by the bank branch manager. And if the branch management is not generating those returns, I think this is the first area of your concern. The moment a limit is overdrawn, and the moment a manager allows a particular party to overdraw the limit, there is a return for it on a daily basis. And if he's not doing it, I think it becomes a point of your long form audit report. And today, Reserve Bank of India has come out with very, very strict instructions with regard to some of the matters which I will like to deal with you in next 15 minutes or so. There are 2 circulars which have come from Reserve Bank of India, very frankly, in the recent times. One circular is dated 12th November and the other circular is dated 15th of February. You need to be careful about these circulars. Please go through these 2 circulars of Reserve Bank of India. These circulars bring out certain things which you have to be very, very careful about. Number 1, it says, as you have been going to the various banks, various branches for the purpose of the branch audits, you must have noticed there are various forms which lie blank, which continue to lie blank. The rate of interest is not filled up, the repayment frequency is not filled up, the date of the repayment is not filled up. These circulars say that under no circumstances an account is a new sanction which takes place beyond 31st of December. No form can be unfilled with regard to any of the columns wherein the rate of interest is to be filled in, or the repayment date is to be filled in, or the you can say the security is to be filled in. You cannot leave anything unfilled. You can't leave anything blank in those cases. And if it has been done, please bring it out as much as you can do. And says in respect of the old accounts, because in the case of the new accounts, they lay down that immediately under all circumstances, you will have to do that. And in respect of the old accounts, this circular says that in respect of the old accounts, what you need to be careful is that whenever these accounts are renewed or reviewed, at that particular point of time, all these columns have to be filled in. Because there are many cases wherein the banks lost because of these blank documents. Because they tried to fill in and the parties could prove somewhere that these have been filled up just now, and this is contrary to what we were conveyed was different, and what they have filled up is absolutely different. And the banks lost those cases. Now the Reserve Bank has come down very, very heavily on this, on the banks, that you can't do this. Number two, they say that if you grant a moratorium with regard to payment of interest or principal for a particular period, in your sanction letter, you will not only say that the repayment will start after 3 years or after 2 years or after 1 year. You will not only mention the moratorium period, you will mention the date on which the repayment will start. So that this period of 3 years is not subject to any kind of double interpretation or triple interpretation as to on which date it is going to start. The repayment is going to start. Whether it is from 3 years from the 1 year from the date of the sanction, or 1 year from the date of the delivery of the letter, or 1 year from any other date. They said nothing doing. You please mention the date in those cases. I think again, just wonderful. Absolutely fantastic. And the other thing that they have said is that suppose you have given, we all know that in respect of the, if the account is identified as an NP account, in that particular case, the interest reversal in respect of the unrealized interest is to take place. What they have said in these circulars is that suppose you granted somebody moratorium of interest payment. You said that the repayment of the interest would start after 2 years or 3 years. And then this particular account becomes NPA, post-moratorium period. They said the interest in respect of the moratorium period will not be reversed. Because that is a sort of a project cost that you have actually vouched for, that this is a part of the project cost, because you yourself treated that probably by that particular point of time, the generation of the cash would not be there. And when the generation of cash is not there, in that particular case, it may not be possible for him to pay the interest. So you have treated it as a part of the project cost. Don't ask for the reversal of interest in those cases. But post-moratorium period, whatever interest has been debited, please ask for the reversal. One of the very significant features now, which has been asked for you to find out is, and it has been told to the bankers to comply with, and as an auditor, I'm supposed to look at it, is in this system now, the SMA status, that is the special mentioned account status. Earlier, the banks used to classify these accounts, prepare the MIS with regard to special mentioned accounts based upon at the month end or at the quarter end. Now the Reserve Bank of India said nothing doing, no month end, no quarter end. It has to be an ongoing basis. On a daily basis, you have to find out the special mentioned accounts. What is special mentioned account? Special mentioned account means where there is an irregularity of 1 day or more. If the irregularity is between 1 day to 30 days, it is SMA 0. If it is between 31 days to 60 days, then it is SMA 1. If it is 61 days to 90 days, then it is SMA 2. Why they have said it? I think that is why I said we need to understand the concept better. We need to understand the banking better, rather than just keep going doing the things on a ritual basis. What they have stated is that you please take it out on a daily basis, and if the bank is not doing it, then you will not be able to identify the NPAs on a daily basis. RBI has very clearly laid down now that even the NPA identification is not at the month end. NPA identification is the moment 90 days period is over on a particular date. That will be the date of the account becoming NPA. I think again a wonderful move. And if you have to relate it with these SMA, if you generate SMA on a daily basis, you will be able to generate NPA on a daily basis. If you don't generate an SMA status on a daily basis, you will not be able to generate the NPA status on a daily basis. Wherever it is not being done, please, for God's sake, it's my humble request to you, in all those cases, please mention it in your report. Because under no circumstances, it is a non-compliance with the guidelines of the Reserve Bank of India. The RBI guidelines in any case are to be complied with, and if the bank is not complying with these guidelines of the Reserve Bank of India, please bring it out under all circumstances. Another very significant change which has come in with regard to classification of the accounts as NPA. Earlier, what was being said was that if the interest in the term loan was debited on a particular date, in that particular case, after the month end, you will calculate a period of 90 days. Now, this is nothing doing. Right from the day on which the interest has been debited, it will be considered to be due. And both the days on which the interest has been debited and the 90 days period has been completed, that will be considered to be the period of an overdue period. And probably the status of the account to be treated as NPA in those cases. So what one is trying to tell you is, for God's sake, somewhere or the other, what we have to be very, very clear about is that we just cannot afford, under any circumstances, any laxity in these matters, which has been now very clearly brought out by the Reserve Bank of India that we are supposed to bring in. And somewhere or the other, they are absolutely clear that even in respect of the cash credit account, now they have done away with the concept of the balance sheet date. Earlier, if you read the cash credit irregularity, they used to mention something regarding the balance sheet date, whether the credits in the account were sufficient to meet the debit of the interest as at the balance sheet date. They have done away with the balance sheet date word. It means on a daily basis, the system should be able to throw out whether the interest which has been debited to the account and the credits which are there are sufficient there to meet the debit of the interest or not. And the moment the 90 days period would be over, in that case, the account would be treated as NPA in those cases. I think these are very, very significant changes which have taken place, and we need to be very, very careful. And one more thing that they have done, this time with regard to the restructuring, which is going to have far-reaching implications, believe me. What Reserve Bank of India has done is that earlier it used to provide for a specified period, and specified period would mean a period of 1 year or more till the date of the last moratorium which was granted. Basically, if the performance of the account was satisfactory in any of the facilities, it was fine. Now, there are a couple of things which the Reserve Bank of India said, that if it says that suppose you are enjoying 5 facilities with a particular bank, one of the facilities becomes NPA, all accounts become NPA. This is already said. Earlier, what used to happen was that the facilities which had become NPA on account of an NPA in a particular account with regard to a particular facility, if that facility used to get regularized, we used to say that the account has become performing, this and nothing doing. Suppose your term loan had become overdue by a period of more than 90 days or more, and all other facilities would become NPA. Now it says that if suppose you repay every penny which was due in case of the NPA to regularize the account, but suppose cash credit account on that particular date is irregular, DP is overdrawn. Unless you regularize that facility also, even if the period of 90 days has not been completed in that case, you will not be able to upgrade that particular facility. Very, very significant change. And it says, suppose the account has been restructured, any account has been restructured. They have brought in a concept of the monitoring period now, and then there is a concept of the specified period, which was there earlier also. Now the monitoring period concept is where the 10% of the payment of the capital or the principal or the interest, whatever has been laid down, has to be paid if in a particular period. If you have paid it, but not before 1 year, you will not be able to upgrade the account before a period of 1 year in any case. Suppose during the monitoring period, the account remains overdue for a period of 1 day or 2 days or 3 days. But at the end of the monitoring period, you have already received 10% of the amount due, whatever was due for the purposes of upgrading the account. Still, you will not be able to upgrade the account, because it will be treated that you have defaulted in that. It will be treated that you have defaulted in that. So what I am trying to say is these norms have become far more stringent, and we are supposed to look at it. And of course, one thing that they have said is that even if during monitoring period there is a default, you can still restructure the account further, but with an additional provision of 15%. Friends, there are things which can go on with the branch audit, and I know Mr. Abhijit is there, a very nice speaker and a very intelligent faculty who is there, very, I think, knowledgeable faculty, which is who is going to be with you. So since mine was only a keynote address, so I will like to finish off here. Thanks a lot for a very patient hearing, and God bless you all, and have a happy branch audit hunting.
Thank you. Thank you very much, sir. You are as candid as always, straightforward, honest, and you have expressed your thoughts about the future of the bank audit, the auditors. We understood it, sir, very well, and we will accordingly plan. And also, if you can please take a minute out to just answer a query by CS Sunil. What he says that the BMs do not share these exceptional reports, returns showing irregularities in advance.
If they don't share it, please give a disclaimed report. Please give a disclaimed report, I am saying, because without exception report, you cannot conduct the audit. There's no way that you can conduct the audit.
Right, sir. Right, sir. Thank you. Thank you very much for the clarification. We appreciate your time, sir. And also we request you to be associated with Vijayawada branch to enlighten our members.
Any time again, friend.
Thank you. Thank you for joining.
Thank you very much. God bless you all.
Thank you, sir. Now, we will quickly skip into the technical session, and Abhijit sir is with us right from the beginning of this program. Now, may I request Treasurer of Vijayawada branch, CA Narayana, to say a few words about Abhijit sir.
CA Abhijit Sangiri, a CA and law graduate with over 3 decades of professional experience, has been speaking in professional seminars for over 2 decades. Have worn various hats over the years as an entrepreneur, practitioner, corporate employee, interviewer, mentor, blogger, author, examiner, and a keynote speaker. Thank you. Over to Abhijit sir for the session.
Thank you. Thank you, Vijayawada branch, for giving me the opportunity to share my experiences. Over the years, yes, I've been handling bank audits right since I passed, which was 1989. And over the years, I've been fortunate to basically be associated with a lot of banks, maybe 60+ banks. I would have been associated in various capacities as statutory audit, concurrent audit, of which we've signed about 16 foreign banks, and we've been associated with another 10 more foreign banks. So we've been associated with about 26 foreign banks, PSUs, private banks, cooperative banks. So it's all about the experience and the exposure which you get in doing work day in, day out. And I've been focused mainly on banking, mostly on risk management. So it's a pure session. Let's have it as interactive. Any questions I could take at any point of time, because I feel it's not easy to keep someone's attention for a complete span of 2 hours. So it's scientifically proved that you need to have breaks after every 20 minutes. And the maximum you can go and on is about 90 minutes. So let me try to have 4 sessions of 20 minutes each, and maybe take any questions. And I have divided the discussions accordingly. Now, frankly, this topic is the first time that I'm speaking on this topic on the first day in a bank branch audit, and especially with focus on new practitioners or people who are doing audits for the first time. So before going directly into what I would like to speak on or share my views, let me just rephrase and answer the query which was last given about not getting the exception reports. And Amarjit sir told about disclaiming, and I completely agree with him. The point is, we have to state as a part of the audit report whether we have received all informations and explanations which to the best of our knowledge and belief were necessary for the purposes of our audit. And in this, you can clearly state that we have not received the exception report. But for this, you'll clearly have to have an audit trail where you have asked for this exception report on day 1 on your data request. And you need to also have the trail where you are continuously following up with the branch to receive that report. It could be exception report, it could be any report. If you're not getting any details despite you putting it on trail mail, then you're perfectly within your rights and duties as an auditor to disclaim the same. Very clear, I'm just repeating it, but yes, the only thing is keep the audit trail mail. The next point I would like to talk on which he touched upon, is system identification of NPAs. Now, system identification of NPAs is something which is from the current year. System identification of NPAs is a must, but you can't identify 100% accounts as NPA from the system. It's impossible. Now, one needs to know that. The point is, what RBI stressed, why these 2 circulars also, which Amarjit ji talked about, the circulars which he gave references on 12th November 2021 and 15th Feb 2022, which talks of the fact that NPA identification has to be on a daily basis, because NPA identification will follow from the SMA identification, which has to be done on a daily basis. And if you are upgrading an account, the entire overdues has to be cleared, means he should not have even a single day's overdue. And that too in all facilities, not just the facility in which the account was an NPA. So all facilities should be not even SMA 0 as in the date of the upgrade. Now, why can accounts still not be classified as an NPA by the system? Because there will be a lot of identification still done by auditors. And where will this audit identification be? One, if the stock auditors have found out that there is no stocks at all, so what comes out is the drop over suddenly becomes nil. And if the drop over becomes nil, as identified by the stock auditors, then you'll have to manually go and reinstate that drop over. So while you have a system of calculation of NPAs, which is based on the drop over, which is also inputted manually, based on the stock statement which is submitted by the borrower, if the bank or the branch has inputted the stock value or the debtor's value or the creditor's value from the stock statement submitted by the borrower without doing any due diligence, and subsequently Either the concurrent auditor or the stock auditor goes for a visit and finds out that there is no stock, or debtors are overstated, or creditors are understated, and he brings the correct figure. Or maybe materially you find out from the auditor's report of 31st March 2021, there's a huge material difference between the stock and what is shown by the borrower. You are well within your right to substitute the correct stock position. And when you substitute this correct stock position, the dropover will go for a toss. The account will be continuously overdrawn. And this will be something which the system has not identified. The second is cases of frauds. If there are cases of frauds, the circular clearly states that you need not go by the classification which is as in substandard. You'll have to make at least a 25% provisioning minimum, or you completely do 100% provisioning. In case where you have no valuation reports for the last 3 years, you don't have any proof of having inspected that security, what would be the value you will assign to that security? Now, if you make that valuation 0 or whatever, or you change it, you'll still need to manually intervene. And it's not just the identification, it's also the provisioning. It's also the classification. The circular says that in case the security value has eroded to more than 50%, then you need not classify it as standard. You can also accelerate it as doubtful. In case more than 90% has eroded, you can classify that as loss. So that accelerated provisioning from the value based, I really don't think the software or the programs which the branches have run are savvy enough to compute all those conditionalities. These will have still to be manually inputted in. And that is why all banks have what they call it as a manual intervention policy. And that manual intervention policy has to be there, and it has to be seen and verified by us that it's followed. It's what they say is there has to be a level of authorization at which somebody can manually intervene as far as once an account has been classified as NPA to basically remove it, or even for adding an account as an NPA. So manual intervention policy is a must. Yes, those system is expected to calculate in the general case NPAs. There will still be exceptions, and there could be various other cases where accounts would be NPA based on maybe your valuation. What is the value you are taking? Are you taking the fair market value, the realizable value, the distress value, the ready reckoner value? What value are you taking? Or in case the account is bad and it's being put up for auction, then the reserve price, because that's what you'll get. And if the bank has put out something as a reserve price, and if it's not even getting that reserve price, then actually you need to give a haircut to that value as compared to what is the value you are putting for that security. So in such cases, all adjustments will have to be made manually. And the IRAC, which RBI says should come from the system, just can't come from the system. What you'll have to do is you'll have to note such cases. You'll have to state specifically in your long form audit report that the system identification is done subject to these areas which are calculated manually or inputted manually. And if a manual intervention policy duly authorized is in place, then you quote that policy. Otherwise, you state that this policy is not in place. And this can also be any other matters you want to refer to the central statutory auditors. You can refer that matter to the central statutory. So that's as far as the manual intervention is concerned. Now, the second thing which I would like to point out is on time management. If somebody is good enough, and I'm not saying good is the enemy of the great. So somebody is brilliant. He has to be brilliant. He has to completely understand, be absolutely clear on the what, why, when, and how of bank audit, which I'll come slightly later. But if he is completely in sync then I agree he can do the bank audits within the timelines which we are generally given. So maybe 15 days, 12 days, 10 days, whatever. So a small branch may take whatever time, a bigger branch may take whatever time, but it's not small or big depending on the size of the advances. It's on the nature of the problems we get when we go into the branch, how deep we go in and how deep the issues are. And what delays us is not the timeline which is given to us by the Reserve Bank or by the bank authorities. The delays are because we do not get data on time. At times, we do not get access to the system. If we are given certain data or certain reports, we are not given the complete reports. If we ask for certain additional details, like certain details is if we ask for the details of, let's say, how many accounts are not linked to the Aadhaar, or it could be how many accounts do not have their emails or mobile numbers noted, in how many cases of FCNR, NRE accounts have the passports expired. There'll be a lot of how many cases of complaints are there, because there'll be a separate register or a separate tracker which will be kept, which you can't, even if you have access to the system, go in, because you really don't know which reports are there. Though you will ask a list of reports, if there are certain reports where the list is not made available to you, you will still have to ask them. And if they're not giving it to you, that will delay your work. So the delay is not your fault. The delay is not in getting the required data on time. The delay is if you have some queries, nobody is answering your queries on time. And at times the requisite people are not even there present in the branch. Unfortunately, last year when we did, a lot of people were impacted by COVID, so they were not there. Luckily, this situation is not there this year. But if somebody has a medical emergency or any other emergency or has gone on leave and the data is not available, the data is given incorrect or the response is incomplete, then this will delay the audit. Now, the mantra for this is always whatever you are doing, please document, please keep the trail made. So whatever you need, whatever you are not getting, just have a summary recap every day. And whatever has been asked on what day and has not been given, the delay, actually put it on record every day. So at the end, if you have to even qualify or disclaim this accounts for not having got the requisite data, you have enough audit trail to back up your stand. And if things are getting too worse, I suggest every 2 or 3 days, even keep the central statutory auditor in the loop straight. So in course of 12 days, if you've asked for data from day one, that's what we'll talk is how do we actually and what do we do on day one. You will have to keep the central statutory auditor in the loop at least 3-4 times. That such similar data is not received. Simple. And this is what, if it's not received, and it's not even the central statutory auditor, you also put it up even to the regional authorities or the zonal authorities. So you can always escalate the issue, and you should. So the second point was on the completeness. The third point, which I would say, is the Reserve Bank of India. The Reserve Bank of India is a stickler for its RBI circulars which they issue. And they very clearly follow the letter of the law. Now, there is an RBI circular which states that if a recovery in any account is made at the year end, then the auditor has to be satisfied of the genuineness of the recovery, and the fact that he is satisfied, that satisfaction or satisfactory reply has to be given to him by the branch. Now, in case that's not done by you, and if any account is regularized on the year end by a certain cash deposit, and if you have no genuine source, So what RBI says is, you be very sure this is not a window dressing. It's not that they have debited some account somewhere, or some person has withdrawn cash somewhere in some account and he's given it to you and you have deposited it to just get the account out of an NPA, and subsequently somewhere you have exchanged that money. So there is some credit somewhere, and post your signing, that amount gets returned back and RBI comes much later. They will still find out that it's a window dressing. So for all entries at the year end, and most of the regularizations happens at the year end, please be careful if this is not from genuine sources. Otherwise, please ask the branch about the source of this entry. So RBI is very clear on the letter of the law. So please follow the letter of the law to the T. You can't have any interpretations. RBI has issued FAQs. So the two circulars on 12th November and 15th Feb are all FAQs. And RBI is very clear that despite the IRAC norms being issued way back in 1992, we are almost in the 30th year of the IRAC norms. Why are there still divergences which are noticed? And there is no practical view. That is what is the view as per the letter of the law. So whatever is the letter of the law in the RBI circular, please follow that to the T. There is no need to have any interpretations which will be on one side. Be conservative in such cases. The next is the returns, which he spoke about, the accuracy of the returns. Now, whenever a return is submitted by the branch, or you will have n number of certificates where you will have to sign and they'll be in a bunch and they'll come to you on the last days, especially. Please take your own time to go through this and ask them from where is it compiled from source and who compiles it, and is it directly compiled from the system, or is it done where there have been any manual interventions to it. Now, is there a maker checker? Is the maker checker operating effectively? And if the maker checker is operating effectively, if you check, how is the branch manager on top and in control that these returns have been submitted correctly when he is not checking it? So, is the bank manager blindly relying on his staff down the line to do it? So there is no super checker here. In Swift, there is a 6-eye principle. So there is only a 4-eye maker checker here. So even at random, is the branch manager checking certain returns to see that the maker checker are doing that work efficiently and effectively and there are no errors? Now you can at most do a random check of how it is compiled some returns. Obviously, it's the concurrent auditor's role to check how these returns are done. But if the concurrent auditor is not verifying that, and we'll come back to that later, if you are relying on the reports of any concurrent auditor or any expert like a valuer or a legal lawyer about the legality of title, the valuer as regards the valuation, as far as the concurrent audit report regarding certain issues which he has raised or which is not raised. The fact that he has not raised certain issues doesn't mean that that area is okay, despite him saying it's okay, because the standards clearly state that if you are relying on the work of a concurrent auditor, you have to do a competency assessment of the scope and the coverage as also his ability to issue the concurrent audit effectively and efficiently. So have you done this assessment? And if you have not done this assessment, then you just can't rely on his work. You'll have to tell him that you are relying on his work. You'll have to discuss with him. You'll have to minute it. You'll have to have the necessary assessment that this work is done with reasonable due care and you can rely on it. And that's when you can use it. And in case he has also not done this verification, then on what basis are you actually certifying that? So this is where you can raise a control weakness. It could be also in your IFC and it could also be parallelly in your long form audit report. So the circulars which he talked about, the key circulars of 12th November and 15th Feb. Now the 12th November circular, it says that henceforth, but even if it's henceforth, the bank should insist and do this. And what it states is that the bank should make the borrower aware of how the SMA or the NPA classification is done. And that should be specifically in the agreement which is entered into with the borrower. So ideally, it should be a part of the sanction letter. So if your sanction letter does not have a para or a sentence or sentences that an account will become an SMA or an NPA as on so and so date, and if it happens, then the provision will be made, the income reversal will be done, and your account will be reported to CRILEC, CIBIL. The borrower has to be clearly made aware, and that's an RBI circular. If it's not done, then that's a point which you'll have to bring out in your long form audit report. And the banks have also been told by this circular to make this awareness by publishing this information not just on the agreement but also on the website of the bank. So if it's not available on the website also, there's one more point which you can basically make that and inform them. So this is as far as taking on what was already told. So that's my 2 bits on it. The key circulars he also told of 5th May 2021 on the resolution framework 2 and 4th June 2021, again, which clarified that the limit for MSME has been increased from 25 crores to 50 crores. So these were the stuff on which he spoke, on which I had certain things to add. Now, before I start, any questions, because I could see 1 or 2 questions on screen. So now I start my actual topic of the first day at the bank branch audit. So any questions? I could see a few questions in the chat. So one is, somebody asked is, what is a balancing report? And whom do we ask for the manual intervention policy? So the manual intervention policy will clearly should be asked from the branch head. If the branch head is not aware that such a policy is there, you should tell him to ask the regional authorities or the zonal authorities. If that also is not being made, parallelly you can write to the central statutory auditors. A lot of things are done manually and there is no manual intervention policy. So please look up to this policy when you finalize it, because this is not a branch issue, it's a bank issue. 1, very clear. Second point, balancing report. Balancing report is, banks have a system of sub-ledgers also. So if you have something in the trial balance, a savings account, which is a particular balance, then that savings account will be built up of various balances of customers. If it's a current account, it will have various balances. If it's a cash credit, it's any account will have its sub balances where there'll be individual customer accounts which are known as sub-ledgers. If the total of this doesn't tally with the total in the trial balance, then there is a balancing issue. You don't have the complete breakup of this. So please ask for this balancing reports. In certain branches, they are called all okay reports, depending on which software is used. Ideally, it should be balanced. It would fathom logic why something should not balance. But yes, there are cases where these imbalances happen for whatever reason. And if there is an imbalance, please get the necessary reports. If they are saying there is no such report, it is nil, please get the management representation letter clearly confirming it. Please also discuss with the concurrent auditors whether he's asked for these reports and he's seen them, because he's there throughout the year. You are just there for 7 days at the end, and maybe another 14 days after the year. So you are there for 3 weeks, whereas he's there for 352 weeks, 52 weeks, 366, 365 days. He's there. Please ask him. Please ask the branch head. If it's not there, have the representation. Please state so that these are balanced. Fine. You have relied on the same. You also discussed with the concurrent auditor. He is also not found anything. So one is if time permits touch upon how many days review is valid and how many reviews can be permitted. So an account can be reviewed or renewed only once every year, unless there is an emergency need for an escalation of enhancement. Otherwise, a review renewal happens only once. I mean, a lot of times, the banks do something which is known as a short review or a technical review. When they don't have all the data, or where that data is not available for whatever reasons, the borrower is an NPA and is not cooperating. And in that case, when the security is zero, ideally, what is the point in even continuing the facility for a short review or a technical review? You can always call back his limits and proceed with recovering his security. So it's not just the fact that you can review or renew. Why it should be renewed also and why it should not be recalled is a call which the auditors can take. And again, if the borrower is not cooperating by submitting the data, if he is a willful defaulter, if he falls under that category, the bank can also term him such that he is a willful defaulter. And if a review and a renewal is pending for more than 6 months, then technically the RBI circular says that the limits have to be made zero. And post 90 days of that, the account will be an NPA. So it's not in the bank's interest for basically keeping that account as an NPA. So they will have to do a review. So what they do is they do a short review and a technical review. Now, if a short review is done once, I may accept it, but I'll still come out very strongly in the long form audit report that it's not an acceptable or a good practice. If an account is being reviewed for a short review or a technical review without any basis, second time, then I may seriously consider whether I should classify this as an NPA. But if it's for the third time, then obviously I will classify as an NPA. And I can also check up what is the policy which the other peers, other branch auditors are following. So I could ask the central statutory auditor also that is there a policy where if a short technical review is done for the second time, you classify it as an NPA. Now, even if the central statutory auditor says that no, we'll permit it as long as it is done, I would say if any short technical review is done for more than once, the account should be classified as an NPA. Now again, what is a short review or what is a technical review or what is a full review? Technically a review is a review. Now you're giving it short because you're just trying to say that you've not got certain details, but that's not acceptable. It's a review is a review. If they've done something faultily, that's a different matter of it. The RBI circular says very clearly that a review should be done. Now they've never said that's a word called short review or technical review. So I would look at the circumstances, and based on the circumstances, I'll take a decision. If a review is not done at all, it's very clear. If a short review is done, maybe once, maybe I'll give the benefit of the doubt. If it's the second time, I'll seriously look into it, whether the account needs to be classified as an NPA. The terms may vary. Each one may have a still conservative opinion. But yes, there is some data, some which is not available. There is some review which is done. And technically, if you see, most of the reviews are short reviews because they really don't have all the information they need. So a full-scale review is just a myth. Everything is a short review. But if you have done something even shorter than that, then just to maybe say, out of sharam ke mare maine full review nahi kiya, maine short review kiya. Fine. I think let's now get very clearly onto our topic for the day. Fine. Is it okay? Can I proceed? the convener, can I proceed ahead with the topic? Fine, I'll go ahead. At any point of time, I think anyone, whoever is the convener, can unmute and maybe guide me accordingly. So first, the first day of the bank branch audit. Now we are looking at a future date. The first day pay, what will I do? But then if I have a first date, which is, let's say, could be 25th of March, could be 26th of March, it could be 27th, it could be in April, whatever. What will I do on the first day? Now, what I do on the first day has a lot to do with how I am planning the bank branch audit. So one, there will be various categories of bank branch auditors. So I'm now talking of firms, and then I'll go to the people who are actually conducting the audit. So if you're talking of firms, you have a category 1, which has been doing bank audits all the years, maybe cooling periods. But yes, they have done a bank branch audit in the previous year, or maybe even in the previous year. So they know. And yes, though they know, there will be issues because the team which has done last time is not the same. So there are some new members who need to be trained. Now, a firm which has all the team members doing the bank branch audit which they did last year is in a much comfortable position, and they can now go much deeper, and they can basically do much more than what they did. They can go in much more depth. They can find more issues. Now, in case of a firm which has done it, but there is a new team, some members are new, then we will need to train the staff accordingly. That's one. There is another firm which could have done the bank branch audits earlier, but they would be in the cooling period, and they would have got a new bank maybe allotted, which they have not done before. And because of the breaks, they need to be slightly refreshed and updated with all the nuances and the circulars which keep on coming. And RBI practically issues about 50 circulars at least relevant during the year, including master circulars and directions. There'll be key circulars which would be there, but there'll be enough circulars to keep someone busy reading it and then finding out whatever the key points and what needs to be actually checked and implemented during course of the audit. That'll be a second category. And the third category is those who have got bank audits itself for the first time and they have never done it. So for them, they'll need to have some guidance or handholding, or maybe if they are stuck up anywhere, they need to consult peers, maybe experts, whoever have been nominated by the ASB to solve members' queries. They can call up any faculties, they can call up your branch committee members and then take guidance on whom to approach. They can ask the central statutory auditors. So there's enough help and guidance on the way available. It's that we just need to ask for help. If it's not available internally, externally. So it's all about initially knowing, yes, you'll get an assignment. And if an assignment is there, who will handle the assignment? What is the team size you'll need? And what is the quality of the team size you'll need? So it's not just if you need 3 resources, how many chartered accountants, how many semi-qualifieds, how many employees, graduates, how many ex-bankers. So you'll all have to take a call, which will depend on basically the complexities of the branch which comes to you and also your experience and your comfort in handling similar audits. So it's all about clarity. Clarity on what we are doing, why we are doing, how we are doing, and when we are doing. So let me take each point one by one. So first, clarity on why we are doing. If we know the why, we can do anything anyhow. So why? Why is a bank branch audit needed? And this answer was quite well explained by Amarjit ji when he said, why is the institute still fighting for the bank branch audit being there when there is a complementary case study put by RBI that in case of private banks, it's only a centralized auditor which does it. So because of the fact that there are a lot of decentralized decisions taken in the branch in case of a PSU and various other factors, there is a necessity of an audit being done because we are giving an independent assurance as to the truth and fairness of the financial statements which have been prepared by the branch, and we are stating that these are true and fair and free from material misstatements. So why? Is we are independent, objective assurance providers, and we are transparently and competently doing our audit. And we have the responsibility and we have the accountability. So we need to be very clear on the why. Why are we doing this? And if we do something wrongly, it's also a blot on the profession as large, because that's where the public perception be, or recent scams, it all impacts not just the person who's done it, it impacts the profession also. So the why is very clear. The why needs to be very clear. Then what are you doing? What are your deliverables? Then your deliverables is you are signing the balance sheet. And by signing the balance sheet, you are stating that it gives a true and fair view of the assets and liabilities of the bank as on that date. Then you are saying that the profit and loss account gives a true and fair view of the profit or the loss of the branch for the year ended on that date. And the cash flow again gives the movement and the flow of cash and bank, cash and cash equivalents from the start of the year to the end of the year. And you are saying that these are true and fair and free from material misstatements. And again, when you are doing an audit, you are clearly issuing an audit report which is in a prescribed format. In that prescribed format, you are telling the management responsibility and you are also stating the auditor's responsibility. Now, when you are telling the management responsibility, please be clear whether that management responsibility, whatever you are stating, that management responsibility has been stated after due examination that the management has actually undertaken that responsibility. So the management is responsible for so and so. Is it really responsible? Is it aware? Is the branch manager really aware of what he is doing? Or is he somebody who's just been promoted as a branch head for the first time in his life and doesn't know what he's doing? And something which is just coming out from the system, he's just printing it and giving it to you for signing. So is he really aware of that responsibility? And if he's not, then please modify that para accordingly, because that para is not a cut paste. So please remember, the audit report is just not a cut paste. Then the auditor is responsible. We conducted our audit in accordance with the standards of auditing. How many of us really know what the standards of auditing are. Now, it's not that we don't know what the standards of auditing are. All of us know what the standards of auditing are. But how many of us are really using the standards of auditing in a formal, structured manner? Because the standards of auditing require us to do a lot of things. So one starts with initial engagement acceptance, which has to be as per prescription, as per guidance, as per guideline. And how do you plan an audit? SA 210. You have SA 240, considerations of fraud. You have SA 315, risk assessment. SA 330, auditor's response to assessed risks. Then you have the 530 series on sampling, 540 on audit evidence, 580 on written representations, SA 320 on materiality. Then you have the 600 series on using the work of another auditor. And you have the SA 700 series on qualifications, on CAMs, on emphasis of matter or other matters. And in between, you have an SA 230 which talks of documentation. Now, SA 230 is just an overarching section which talks on documentation. Each essay requires you to document. Now, when an essay requires you to document, and when we say that we have conducted our audit in accordance with the standards of auditing, in case we have not conducted that, which we have stated, we could be liable for disciplinary action. If in a peer review, it's found out, or maybe in a NAFRA review, we found out that we have not followed the standards of auditing, we could be liable. So do we have a checklist of what are the standards of auditing? So I'll give you a simple example. Written representations. SA 580. Are you actually getting written representations? If not, we'll have to qualify that we've complied with all the standards of auditing except SA 580, where we have not obtained written representations. SA 550, balance confirmations. Have you obtained balance confirmation? So has the bank obtained balance confirmations, in the sense, has the bank sent out as of 31st March, this was the balance of a cash credit account or of a loan account, or this was the balance in a deposit account, or have they sent it and obtained the confirmation, or have they informed the borrower or the depositor accordingly? If they have not, then there's no system of sending balance confirmations. So SA 550 can be qualified. Now the 700 series talks about, in case there is an MOC, which is a qualification, then you'll have to inform the SSE, in case the auditee, in case the branch head, in writing that this is the MOC you intend to pass, and this is the rationale or the justification why you are passing the MOC. So it's not just that you pass the MOC, and it's not just that you have discussed verbally. You'll have to create an audit trail by writing to it. And if he has something to say, you'll have to consider that response while you're framing the final MOC. So you may have done absolutely good in finding 10 MOCs, but have you really complied with the essay to the limited part of informing him? So you might feel very happy that you have really done a great job, and 99% of the hard work is done, which will be completely overshadowed or maybe completely destroyed by the single fact that you have not put it on writing and kept an audit trail as required by SA7. SA 321 materiality. What are the materiality levels you have taken has to be documented. SA 530 audit sampling. What is the audit sample you took? Needs to be documented. So have we signed off on these documents? Do we have a documentation checklist? And there's something called the audit quality maturity model, which has come out, which is basically prescriptive in nature as of date. The institute would make it mandatory sometime shortly. And if you have not gone through the audit quality maturity model, please go through it. There's a digital competency maturity model also. But this EQMM, there's a questionnaire on various aspects. There are marks to it. So that initially it's a self-evaluation, but subsequently you can do an external evaluation also. And there are 4 levels, level 1, level 2, level 3, level 4. So which level you are in. And maybe when it becomes mandatory, that might be used as a base by SSCs or auditees to select you, like they do for concurrent audit. You should do XYZ course, you should have a DISA or whatever, or even in stat audit. So they would say that the point is, have you done your study of essays? And one of the biggest checklists in this EQMM is compliance with the essays and training to staff and whatsoever. So please comply with the essays. And there was one question which said that the branch manager countersigns it. Isn't that enough? I would say that's not enough, because that is done as a formality of signing. The standard of auditing states very clearly that you should communicate to him. The point that he signed, he said he can clearly take a stand that he's just signed as a formality. He's not aware, and that signing doesn't mean it's accepted in toto. His response was not taken. He was not given the time. So you can technically be in trouble. I think let's not look at finding corrective controls when we can easily do something. And sometimes as chartered accountants, I feel one of the biggest issues we do when we de-risk is we overthink. If something is straightforward and needs to be done, and you just need to send an audit trail mail which takes 5 minutes, just do it. Just don't overthink that is countersigned. So yes, I'll argue. Technically, it's right. Yes, you're right, but why go into a litigation? And somebody else's would decide your fate. Why keep it? When there's a letter of the law stating is, follow the letter of the law, because RBI is very clear in the letter of the law. Even the spirit of the law is supreme. So spirit is fine. I will follow the spirit also, and I'll follow the letter also. So that's as far as the audit report. So the standards of auditing. And then comes your guidance note on audit of banks. The guidance note is authoritative guidance which is given by the institute to chartered accountants as a guide that this is how you should conduct the audit. Now, there is a clear-cut appendix. There is a clear-cut appendix, and I quote that appendix, Appendix 9. It is an appendix on an illustrative bank branch audit program. It's a 20-page illustrative checklist on how, what you should get, what you should obtain. So please, before you even go to the branch, please have a look at the guidance note on audit of banks. Whoever is a part of the audit team, including the partner, including the reviewer, including the trainees, including the semi-qualifieds, please have a look at the guidance note on audit of banks, and more specifically on the guidance note, Appendix 9, which completely gives you a bank branch audit program. It's tailor-made, ready-made, encompassing all the points. Maybe you could add a bit more, but yes, it gives you a 99.5% accuracy. You can even be 99.9 and 99.999. You can add it, but this is quite exhaustively done. I think even if you do this, this is more than enough, because I've seen over the years, even this becomes too tough and apt to follow. Then your Appendix 7, which gives an illustrative format of an MRL. What is the MRL you should obtain? Now, there have been a lot of questions at various forums that the bank is not giving the MRL in the format which we've asked, or is not giving an MRL at all. Absolute non-compliance with the standard of auditing which needs to be qualified. The central audit, statutory auditor needs to be involved immediately that this is not made available. And there are various aspects which without an MRL, you just can't certify. And please be aware that you are in the branch maximum 7 days of the year in which you are auditing. At times, you may just start on April 2nd, so you have not been for a single day in the branch. And you are there only for maybe 15 days or so in the year thereafter. But you are auditing the year from 1st April 2021 to 31st March 2022. And if you are not there in the branch for the entire year, how can you comment on the systems and procedures of the bank as at and for the year when you were just not there? The simple questions on dual custody of cash or whatever procedures which are there, security. You can only do it. One is based on the concurrent audit reports. That too, you'll have to comply with the SA 600 requirements to rely on the concurrent audit. You can't blindly rely. You'll have to obtain the MRL, which gives you a representation that yes, this is what was the system. Or maybe even for depreciation of fixed assets, what is the useful life? The useful life is assessed by them. If it doesn't give you a certificate or a representation that this is the useful life, in case it's technical, you may need a certificate in normal courses. That's the useful life. Maybe that's what is followed by the bank, but not necessarily. Generally, all assets will have the same useful life. Depending on whatever is taken, there can be a lesser useful life. So such representations need to be obtained. Have we really obtained that? If not, let's qualify or disclaim appropriately wherever needed. I think let's be bold, let's be courageous. I think that's the key which is needed. Need to be mentally tough. If you're passing an MOC, you will come under pressure. The branch head will resist it. The zonal head will resist it. The regional head can also be there in between. But if you're doing something right, have the courage of conviction to call a spade a spade. I think that's what bank branch audit clearly means. It means the courage of a conviction to stand for what is right, to stand what is stated in the letter of the law, which is the RBI circular, to stand for what is stated in the bank internal circulars and their policies and procedures. So let's do our work with reasonable due care and with due diligence. So you have the illustrative format of a bank branch audit program in Annex Appendix 9 to the guidance note. Illustrative format of an MRL is given in Annexure 7. And you have an Appendix 10, which also states what are the reasons for the divergences in NPAs which are noticed. So one, The guidance note is completely prepared for the members' point of view. There is a team of about 20 members which is compiling various chapters. There's a maker checker, somebody is writing the chapter, somebody is reviewing. I've been fortunate to be a part of the team for the last 7 years. I would have drafted quite a few chapters. I would have cut a lot of videos for the institute. So a lot of video lectures are available on the institute website on each of the topics. So you can even listen to that on the move. So please read the guidance note completely, because these 3 things are completely giving you a ready-made masala, I could say. It's as quick or even quicker than a 5-minute Maggi noodle. It's ready-made. Just need to send the same format of an MRL with maybe few changes wherever applicable or where it's not there. The reasons for divergence is something we need to see in case of an NPS. Majority of our MOCs are on NPS. And the bank branch audit program on what you should do is readily available. Now, in the guidance note 2022, and let me be very specific, so I want to save time because we have limited time. Page 271, specific, please note it. Page 271 clearly states the illustrative list of documents which needs to be maintained in a bank branch audit file. So this is what is a program as per Appendix 9 and as per the page 271 onwards, a checklist of what document you should obtain and keep it in your bank branch audit file. Now, how easy is for us to obtain it, and how easier it is for the peer reviewer when he comes, and bank branch audits have been in peer review now. So if you have done a bank branch audit and a peer reviewer, just a theoretician, just comes and says, okay, tell me your bank branch audit file. Tell me what does it contain, and he'll obtain page 271 and he'll see what is there, and he'll just map and make a tick and find out that 20% of the things are only obtained. Where do you stand? Now forget what the peer review does, or he comes or he doesn't do. But you have a ready-made checklist. And from that ready-made checklist, page 271, which gives the checklist, you can easily have the documents you need, and you can ask the bank for that. Or ask your branch for it, or the branches which you have for it. So Appendix 9, 7, 10 of the guidance note is mandatory to be read. Page 307 of the same guidance note gives an illustrative list of all the special purpose or the exception reports which are generated by banks in a core banking solution. Now, this gives an exhaustive list of reports. Now, the key is the exception report. The key is the suspicious transaction report. The key is reports of debits in income accounts or credits in expense account, dormant accounts. The key is suspense accounts, aging in suspense accounts, inter-office reconciliation accounts, SMA accounts, security-wise accounts. So there'll be interest-wise accounts. So you may get a report on what is the interest rate charged to various accounts. So hypothetically, if your branch has 100 crore advance, so for that 100 crore advance which you have seen in the trial balance and in the balance sheet, how many accounts are there? Each borrower may have 3 accounts. So maybe 100 crores, there are 300 accounts. So you will get a report which says for each of these accounts, what is the interest rate which is charged. And if you see an account with a balance, and if you see that a 0% interest rate has been charged to him, you need to check in that it's your revenue leakage made simple. You would obviously check because there's a specific point in the LFR whether the interest rate has been correctly applied, and in the interest master it has been set up. So you might at random check certain account because there's a specific question for which there'll be a specific answer. But such reports, and these are these reports which are given in the checklist which is there. So please read this checklist, please read the guidance note, and when you approach a bank on the first day, you have a bank branch audit program ready, which you can give and discuss with the branch head that this is the audit program which I'll follow, and this is what my institute has guided me to do it. No central statutory auditor can disagree with it, because most of them have been part of the committee which has framed it. No bank can challenge why you are doing such audit in depth. Is because you have been guided by the institute to do so. And if you don't get any of these details which are material, then you are well within your rights to disclaim or qualify it appropriately as not having got it based on whatever impact that report will have on the accounts. So page 271, page 307, you note. Now page 482. Page 482 gives very clearly what are the advance accounts you should select for scrutiny. Now the long form audit report very clearly states that 10% of the accounts, the top 10% or 10 crores, whichever is lower, needs to be selected. Accounts which constitute more than 10% of the outstanding advance. So if the outstanding advance is, let's say, 50 crores, then all accounts over 5 crores will have to be selected, because 5 or 10 which are lower, 5 is lower. So 5 crores and above, whatever account you have, you will have to select, and you will have to do a complete audit, including a transactional. And for other accounts, you do a process audit. So you pick up 2-3 accounts of each product type, maybe an educational loan, housing loan, real estate loan, LAP, LAS, FD against OD, OD against FD, personal loans, gold loans, whatever are the loans which are offered, you can take. Vehicle loans, sample checks you can do. And it also says that top 5 standard accounts also you examine. So obviously, top 5 standard accounts, all of those in the top 10% or 10 crores is less than 5, then you still need to see the top 5. Minimum 5, so you will have to do. So please read the requirements. So one is you are issuing the audit report. You are certifying the balance sheet, P&L, and the cash flows. And there is a host of certifications which is there. There is a host of questions in the LFR you will need to answer. Apart from certifications on Ghosh Dilani. So your signing of the balance sheet, your signing of the tax audit report. In certain banks it has been done away with. So the audit report, the signing of the financials, the issuance of the LFR, the certifications, Ghosh Dilani included, and maybe tax audit report in case it is there. So these are your deliverables. And the long form audit report. It's long in form, but is our answer long enough? Are we actually answering the LFR in the manner the question is asked? So if I've asked A, I should write A. Why should I write about C? And if a question is in 3 subparts, A, B, C, I should answer each subpart. A, this is the question, this is the answer. B, this is the question, this is the answer. C. At times we just write A or C, and we write B, which is not asked for also. So if that D is a part of C, it's fine. But at times I've made A, B, C, D when D is not there. Second, please remember in the long form audit report, when we issue the long form audit report, as we said, it's an internal audit report. It's a questionnaire which we answer. And when we answer the questionnaire, it's a specific questionnaire, so our answers should be specific. And because of the paucity of time, it's not possible for us to do a 100% check. So what we do is we do a process check. We do a control check. We sample certain transactions. And based on our issues noticed, or the threats or the gaps noticed in those or the errors noticed, we issue our conclusion or our opinion or our finding. Maybe we may decide to even go a bit more deeper in it and check a bit more. But whatever we do, we should clearly state what we did, how we did, and to what extent we did. And in the end, when I wrap up, I'll wrap up with the 12 golden rules, the 12 commandments which I've put up in one journal which I wrote. And bank audit is subject to risks. The key is to manage risk. The key is to manage the unexpected. So expect the unexpected. Anything can go wrong anytime, sometimes and at all times. How do you de-risk? Every risk needs to be de-risked. Whenever there is a risk, you need to de-risk. So how do you do it? We cannot give absolute assurance. The special purpose certification guidance note issued in September 2016 clearly states that we cannot certify true and correct. We can only be true and fair. And we can only be true and fair when we specifically state that we are giving a limited and a reasonable assurance, or limited or reasonable. And it can only be based on what we did, how we did, and to what extent. To what extent means we are sampling. Please state what was your sample size in number, not in terms of percentage. You can state in terms of percentage also, but state the number also. So that's to what extent we did. What we did is, what were the reports which you obtained and checked? And if you obtain certain reports, then within that report, what did you check? And how did you check? So did you do a physical verification? Did you do a balance confirmation? Did you do some analytical tests? Did you take representations? On what basis have you certified certain things? The methodology of your work done to arrive at the conclusion which you are giving has to be stated categorically in the long form audit report or in the certification. So in the long form audit report, I always start that this long form audit report for the year has been issued by XYZ and Company Chartered Accountants based on their appointment which was done on so and so date and accepted by us on so and so date, and the audit which was commenced on so and so date and which was concluded on so and so date. So this was done based on our working in the branch on these dates only, and we have relied on so and so, whatever I have relied on, and I have taken due cognizance of the standards of auditing, especially wherever I would need to highlight on written representations, balance confirmations, qualifications, or whatever is there I have done, or whatever is not done, I would specifically state so there. So by stating that and subsequently stating in each what if this is a question I'm arriving at a conclusion based on what I did, how I did, and to what extent. So I will have a detailed response to each question, which would state very specifically. So it's not that I will have an answer which is much shorter than the question. Yes, no, not applicable is just not accepted. And it's something where you need to know very clearly and your expectations from the branch management. So what is his responsibility? What is he giving you? So one is the MRL. And the second, in case of the long form audit report, there is a specific format which has been prescribed by the Reserve Bank of India. And that format which is prescribed by the Reserve Bank of India has to be filled in by the branch. And it's a 25 question format. And that format has some very key questions. So one question there is details of valuation and evidence thereof. So what is the valuation done? And what is the evidence? And specifically, I need evidence to the fact that if this is a value which has been stated by the valuer, why has the branch manager accepted it? The RBI in its discussion very clearly states you don't accept anything blindly, especially which is coming from an external source, and even our standards of auditing states so. The point is, if it looks too blatantly incorrect, then you need to insist on a second valuation. At times you may not be experts, and many times you may not be experts. But if there's something which you know very clearly that this is inflated, especially if it comes to a property price in an area. So if there is a Vijayawada property which is as a collateral security, and you know for sure that the market value or the realizable value or the fair value is not more than 20,000 rupees per square feet, and the valuation is done at a 40,000 square feet and it's highly inflated, obviously you can't accept it. So the RBI in one of its discussions, so it would vary from person to person, but the RBI in one of its discussions said, you put yourself in the shoes that if you were going to buy the property, what price you would have paid. So that's quite a theoretical answer, but what they mean is, and do your due diligence and don't accept something at face value. So this is one point. The second point which is asked in this specific question is compliance with the terms and conditions of the sanction. And at a lot of times, I have seen that the branch manager has written dash, means there is nothing which is pending. And if you check up the long form audit report of previous year, the same dash was there, but the previous auditor had some queries of non-compliances, or based on his audit, you would also have some non-compliances, or maybe the concurrent auditor would have listed a lot of pending issues, open issues. Now, if the concurrent auditor is stating there are certain non-compliances, why is the branch manager stating nil? How can you accept such a report from him? Either then you will have to have no faith in whatever he's doing, your skepticism should be higher, or you send it back for him to incorporate with those changes. Because it is his report, he has to give it to you correctly. And that's what he's stating, our management responsibility. And we are doing it. Audit is just the last line of defense. So, asset coverage. The borrower is valuing his goods at market value, but insuring it at book value. So I have a collateral of 100 rupees as a security, The value may be inflated, but still the value is 50 rupees. But if the book value is 20 rupees, then I'm insuring it at 20 rupees to save on the insurance premium. But isn't the bank at a higher risk? Then these are issues which generally one gets. Audit qualifications. The branch manager at times just writes dash, or in many cases, the audited financials are not obtained at all. Now, he can't put dash, he has to put not obtained. And he has to state why he is not obtained it. Because ideally, your accounts, the worst of the cases, March 15th is the last date. So on March 16th, at worst case, all financials should be there when you go in. If it's not there, then it's just a lethargy or a non-cooperative attitude from part of the borrower. Or maybe there must be something to hide, so it's not submitted. And audit qualifications. Does the bank manager really know what qualifications are? So it may not be qualified as such, but somewhere it would be a certain attention to certain notes. Or there could be some notes which may be qualificatory in nature, which maybe unfortunately the chartered accountant may not have qualified, but the branch manager has to read in between the lines. That's what he's expected to do. And we as chartered accountants, if for all the top accounts, that 5 accounts or whatever, 10 crores or what we are doing, we need to see the entire financials, just dissect it completely. And if there are any qualifications which are not coming in, we have to state so. And 2 basically important questions which is asked is the observations on operation of the account. This is question number 21 of that checklist. And question number 23 is branch manager's overview on the accounts and the operation. Now, this assumes importance because the RBI expects us to do a complete transaction audit. Now, we will completely have done our audit and we may come to an opinion, but ideally, it wants the branch manager also to state his opinion on the operations in the account, and not in one question, in 2 questions, it's repeating possibly the same thing. So that's what is the stress or the importance it is giving to the bank to bring that operations out. And what do we get there? Operations in the account, good, bad, and ugly. They don't use the word ugly. Very rarely they use the word unsatisfactory. But many times the word is good, okay, satisfactory. Now, this is not a one-word question answer. He has to give a complete overview. Question number 23 asks for an overview. An overview cannot be a one-word answer. So this is something which you should not accept. And when you give this questionnaire to the branch on day 1, please highlight that this is what you expect from him, not just a one-word answer. I need a complete overview of that account. What is the actual risk in the account? What is the default risk? What is his business risk? What is his strategy? What is his cash flow? How competitive is he in his industry? Is there a supplier risk to him? Is there a concentration of sales to a few parties where if they go bust, or if they change, or if they dominate the pricing, he'll go for a complete toss? What exactly is he? Is he relying on certain key countries? So somebody who would be exporting to Russia or importing from Russia, his business may be at a problem. Somebody who's doing the car spare part because of the semiconductor shortage, they could be an issue. The contact industry always is in a problem because of the COVID. So he's he's supposed to give you a risk overview, not just a one-liner answer. So please, before going to the first day of the branch, please be very clear on reading the guidance note completely. And when I'm saying guidance note, it is exhaustive. It gives reference to a lot of RBI circulars. So read those circulars which are specifically given. The guidance note has specifically bifurcated the bank branch audit and the central audit separately. So whatever are the lesser pages in the guidance note, please have a look. And again, the Institute Journal brings out articles. So the March journal of the ICAI has brought out two articles on bank branch audit. One is on risk management in bank branch audit, page 88 of the journal. And this privilege was given to me to write that article. So it's my article which has come out in the March 2022 ICAI journal. Please read that, how you could manage your risks. It's better to know beforehand what risks you could face and know how you could manage it proactively and in a very structured manner. So what is the credit risk? What is the money laundering risk? What is the operational risk? What is the financial risk? What is the market risk? What is the interest rate risk? What is the legal risk, regulatory risk, social media risk, IT risk, business continuity risk, the HR risk, the pricing risk? All these risks will have to be known by you. The knowledge of business is key. Then, what are your controls? Your maker checker, job rotations, job descriptions, mandatory leaves, authorizations, ratifications, confirmations, verifications, analytical procedures, audits, inspections. This would all be your controls. Are these controls automated or they are manual? Are these detective and reactive or proactive and preventive? Do you have collaborative, corrective and deterrent controls? Has somebody done a control testing both for the design and the operative effectiveness? And if you are certifying IFC, which is one of your deliverable, the IFC guidance note, which is issued by the institute, talks of a risk matrix. And risk matrix is nothing but identifying risks into probability and impact. So that, and after identifying risk, mapping the control to the risk. So risk identification 1, probability impact, again high, medium, low, 3-point scale. Controls, all the controls you map it. And R minus C is the gap. So risks minus controls is the gap. So risks will be the inherent or the gross risks. Your C is the control. It could be a design and the implementation. And ideally controls have to be proactive, preventive, automated, collaborative, corrective and deterrent. Any manual or reactive control is something which you should highlight as a control weakness. And whether my inherent risk or my gross risk is within my risk appetite, and whether my residual risk, that is the risk minus control, is the gap, threat or the vulnerability, whether it is transactionally within my risk tolerance, is what risk management is all about. And the person who's responsible for managing the risk is the branch head. Does the branch head have a risk register or what we call a risk universe or a risk library of what risks the bank will face? Now, he may tell you anything, but is there a structured document? And if there is no structured document, all approaches to managing risk will always be haphazard, will always be reactive, will always be instinctive, will always be by the gut. It is not a balancing of the gut with the logic, with the rational, with the reasoning. And it's not an informed decision that will be taken. So a structured risk management process, if it's not there, that's the first big issue you need to highlight or qualify in the long form audit. Then if the control weakness is there, then obviously the qualification in the IFC. And then if the risk itself is not there, what about frauds? Because fraud is a risk which even your maker checker cannot detect if there is a collusion and a circumvention of control by the maker and the checker. So fraud is even serious than a normal risk. Because fraud has as intent, fraud has that guilty mind, a calculative mind behind it. So what you need to do is, like you are training your people to know the banking in and out, know the circulars in and out, know the guidance which we have given in and out. Is the bank training its officials to manage risks, to set up controls, to identify fraud scenarios? Are they giving them training on anti-fraud controls? Is there an awareness, sensitization of what can go wrong? If such things are not there, please state so. Because in the limited time, it's not possible for us to detect frauds. Frauds are committed by people who know the weaknesses in the system in and out. They have observed, tested, had their dry runs, and taken due care that they leave no audit trail or they cannot be detected easily. It's not possible for us to detect a fraud in such a short period of time. Yes, if we find it something which we can find, yes. But then the primary responsibility of risk management, of fraud control is on the bank. It's his responsibility. Is he discharging that? If he's not discharging that, please state so. Please just put that in your report. Because if something happens, there is something which you have talked of risks, something which you had talked of controls. So any questions at this stage? I'll take a pause before I go to the final 10 golden commandments, as I say, which needs to basically be followed by a bank branch auditor.
Sir, can we first exhaust the questions in the chat box and then go on?
Yeah, you can just ask me the questions. I'll answer. Yeah.
Yes, sir. Yes, sir. Give me a second. You have already answered this. You and Chopra sir answered this exceptional reports if they are not made available. That has been done with. And next, CA Sunil sir is asking, whom do we ask for manual intervention policy?
So I answered this. The manual intervention policy, we'll have to ask it from the branch head. If the branch head is not aware, from the regional head. If the regional head is not aware, the zonal head. Otherwise, we can always ask from the central statutory auditor or tell them there is no manual intervention policy.
Okay. CA Chandi Prasad sir is asking, where can we get the RBI circulars?
So the RBI circulars is simple. Just go to the net, type www.rbi.org.in. You'll have a whole lot of notifications and there'll be master circulars, master directions. But I would tell a more simpler way is that if you need to check RBI circulars, your guidance note on audit of banks will give you what RBI circulars need to be checked. So there'll be 10,000 RBI circulars. You might need to check only 100 of them. So what 100 you need to check? Your guidance note is the Bible. It's the encyclopedia. It's the Wikipedia. It's the master direction, master circular for all of us chartered accountants. So please refer the guidance note. It will tell you which RBI circular to refer to, and you can just put that name, the date. So simple, if you can even put November 4, 2021 RBI circular, the circular will pop up. So one key circular about fraud, which I just noted down, is the 7th May 2015 circular on early warning signals. It's called on red flagging of accounts and early warning signals. That gives 42 parameters which a bank should monitor. So an early warning signal, the account going into an RFA. Now, all these circulars are brought out in the guidance note, and the guidance note has been very simplistically written. In case any of you member has any issue and needs any clarification, he can call me up anytime. He can WhatsApp me. I will give the answer within the next 6 hours.
Right, sir. And CA Abhinav is asking as to what do you mean by a balancing report?
So I answered that a balancing report is your sub ledger and the general ledger. The general ledger may show a saving account. The sub ledger will show all the 20,000, 30,000 savings account and each of their balances. Ideally, they should balance. They should tally. Why they are not tallying? Maybe some bugs, some errors, some entry posted here and there. You need to find that out.
Right, sir. And he has another question as to how we can check or identify unresponded transactions.
So unresponded transactions is that there is an inter-office reconciliation account. That reconciliation account will give the balance as per the HO and the balance as per my books. If there is a difference, this difference is only because of entries which are unresponded either by my side or it is unresponded from the part of the HO. So once you do a reconciliation, you can always know the unresponded entries. Now, as far as the entries which are not responded by me, I need to ensure that they are responded. So that's what the auditor will hammer the branch guys. Please get this adjusted, reversed, rectified. As far as the HO is concerned, I just need to follow up. I have no control with them. At the best, I can communicate that to the central statutory auditors and say these are entries which are responded from the HO side from long.
Yeah, CA K. Ramakrishnan wants to know as to how many day review is valid, maybe limited review in his opinion, I think. And how many?
There is nothing which I discussed. There is nothing called a limited review. There can only be a full review. And a review needs to be in depth. It's a risk-based review. No bank does a review in depth. So the degrees of short or long or medium will vary. So if 100% is the benchmark, no bank does 80% also. So now whether they do a 25% and call it a short review, or they do a 50% and call it a short review, or they just do a 10% and call a short review is something which we need to see what have they reviewed. I can give them the benefit of doubt once. I can't give them the benefit of doubt the second time. A lot of chartered accountants may not even give them the benefit of doubt for the first time. But technically, if there is a loan which is secured against property, a CC also, and I've not got the papers for whatever reason, but my security is there, and there's not much credit default risk, a bank may do a short review based on whatever information is available because they are sure this account will finally, even if it goes junk, they can sell the property and recover the money. So in such cases, they may do a short review. When they have no information, they'll just say reviewed for 3 months or so. But that's what I said. I will accept it once. I will not accept it for the second time. And if there are a lot of factors which are bad, like there's no turnover in the account, there are check bouncings, the debt equity is not there, the ratio analysis goes for a toss, I will qualify that account as an NPA because I would say there's no practically review done. And the RBI circular is very clear. If the review is not done for more than 6 months, then you extend that 90 days to it and classify it as an NPA. Simple. It's the bank's problem to do a review.
Right. So the next 3 questions have also been answered with the same question.
There was one question I just saw which was not answered by me. If there is a deviation in the policies from RBI guidelines, should we qualify the branch report or just MOC's sufficient. Now, what is an MOC? An MOC is something which impacts the accounts. And LFAR is a detailed internal audit report. So if the branch has no security guard or the cashier comes late, these issues will not impact the accounts. But if the cash is missing, then there is an accounting entry I need to pass that the cash is not there. So I'll book a loss, a cash loss. Physically, it's not there. It's an impairment. So if the RBI guidelines are not followed and as a result, the account becomes an NPA, then I need to provide, I need to reverse the income. In that case, I need to pass an MOC. But in case there is a delay in submitting the insurance policy or many checks have bounced, that would not make an impact on the MOC. So MOC is a separate part, which if any issue you have noted which impacts the financial accounts, the profitability or the balance sheet asset or liability, you pass it. You give additional details of it in the LFAR. Vice versa, you can't give a qualification in the LFAR. Like the brand manager says, नहीं, MOC pass करने नहीं देंगे, तुमको LFAR में जो लिखना है, you write. That's not allowed. That's a strict no. If there is a qualification, it has to be in the accounts. If there is an MOC, it has to be passed. You can also state whatever the issues were in the LFAR. But just by stating the issues in the LFAR and not passing an MOC is you are digging your own grave. You are keeping evidence against yourself, something which you ought to qualify, you have not qualified. And why are you stating it then in the LFAR? You as well don't state it. If you want to favor the branch, please don't state so. I'm not saying you should not. But by stating in the LFAR something which is a qualification is even more riskier.
Right, sir. Participants are free to unmute themselves and pose any question to the speaker.
I hope I've been legible and have been able to add value.
Yes, sir. Yes, sir. Definitely, sir. Definitely. Many questions have been answered by you, sir, in the course of your deliberations. The participants...
I just remember last year I was speaking in 2020 in the pandemic. I was speaking in Calcutta, and the question answers went for 1.5 hours.
Yes, sir.
And then they invited me when the speaker had spoken, and they invited me for just answering the question because he wanted to leave and they knew that there'll be a lot of questions. So the questions went on for another hour.
Yes.
So,
yes.
So the point is, yes, in the pandemic, there were a lot of uncertainties on how the data should be received and what we should do. The institute had very clearly issued a guidance note on that, on a work from home or a remote audit. I don't think this will happen this year, but you can as well read it in case, yes, there could be, maybe there's still 15 days to go. Anything can happen. Shenzhen is locked today. I hope nothing happens and nothing will happen, I'm sure, but we should always be prepared for the worst.
Sir, don't think that there will be any hurdle for bank audit because China has some increased cases just 2 days before, but it may take a while to reach the other countries.
That's what I said. So this will not happen. So let's not speculate on that. But if something happens, then we anyway have our guidance note and we can follow that.
Yes, sir. Yes, sir. The participants can now unmute themselves and please, if you have any queries.
So what I'll do is I'll just conclude my session with this 12 golden commandments, which all of you should basically feel, I think, should follow. So one is the long form audit report or the certifications which you do. Always state what you did, how you did, and to what extent you did. Rule number 1. You can't give an absolute assurance. It's only limited or reasonable. Second rule, in the LFAR, please state that this LFAR has been done based on your workings for these days in that year and these dates in the next year. And rule number 3, you add that because it was done for, and at times you may have not been in the bank for the entire year itself, you are stating whatever you are stating is based on your findings and observations on the process on the date you did it, which was in the next year. And based on the representations or based on the concurrent audit reports or based on the previous year's LFAR and based on the discussions with them, which we have minuted, and in accordance with the standards of auditing, we have relied on the same. So please state that. Please have discussions with central statutory auditors, with the previous year's auditors, with the regional or the zonal authorities, in case, as you said, if you are not getting a policy, and if you are discussing that, whatever you have discussed, please document, because they are what we call as TCWG, those charged with governance. The controlling authorities. If you see the LFAR, there is a term used, controlling authorities. So the branch head, the regional head, the zonal head are all controlling authorities. So if you have any discussions with them, please minute that. That's your audit trail, audit evidence that you did your audit with sufficient and reasonable due care, which is what the institute expects from us. Rule number 5. Sign the long form audit report before you sign the annual accounts. And before you sign off the LFAR, please sign off the documentation checklist, which is mandatory to be done as per the standards of auditing. Rule number 6. Please read the guidance note on audit of banks 2022 edition. If you are not clear on that, please ask me. You can ask me, WhatsApp me at any point of time in the night. I may reply within the next 6 hours. I will do it. There is also an expert body which the Auditing and Assurance Standard Board sets up. So any member, if he has any query, he can ask the expert panel and they will answer. They are supposed to answer it in the next 24 hours. So please make use of it. Please consult the expert panel. When in doubt, please clarify and qualify appropriately. So when in doubt, clarify and qualify appropriately. Another rule. Your audit report is not a cut-paste exercise. If it's a management responsibility, if you are stating this is the management responsibility, please see whether management has exercised its responsibility to the manner in which it is expected from them. Auditor's responsibility, when you are stating that as a responsibility, please be very clear on what you are stating you have done. If you have not done that, please do it. If there is something which needs to be qualified or disclaimed, please do that. Amarjit ji was very clear on the disclaimer, and I've been saying since number of years that if there is any disclaimer, please disclaim. I went even to the extent, the first guidance note, my contribution was way back in 2010. And in 2010, I had even said that if you have issues like you have not been given the system access, at time you don't even have the space to table nahi rehta hai aapko baithne. Some person leaves and some person goes somewhere for his lunch, then you are made available the table or the system. If you have all such difficulties, maybe those were things of the past. But if you, in case any auditor face any such issues, please bring that out very clearly. I think we need to clearly be very factual in what we have done and what we've got. Then answering the question which was asked, another rule, the LFAR is not a substitute for the audit report. LFAR can only elaborate. LFAR can only be in addition to an issue which needs a qualification in the audit report, because that issue affects the true and fair view of the accounts. So if the depreciation is not charged correctly, if there are n number of entries pending in your advance account as advances for fixed assets, where those fixed assets have already been utilized in the branch, then you need to book the fixed asset and depreciate it. No amount of writing in the LFER will save you. Similarly, when account is an NPA, no amount of security which is there will save you, and no amount of bringing that out in the LFER will be the correct way of doing it. So LFER is on its own separate as an internal audit report. Our audit report is a historical review of financial information. It's a report which certifies the true and fair view. Simple. Anything which impacts my profitability and my balance sheet asset and liability has to be qualified or changed by way of an MOC. Whenever you are in doubt, as I said, please clarify and qualify appropriately. Please take necessary help. You'll have a lot of fellow members. The first thing is you can contact fellow members of your Vijayawada study circle or your southern zone, or you can speak with the central statutory auditors, or you can speak with any of the faculties who are there in all of your courses. As I said, you can call me openly, or you can be in touch with the expert faculty which has been set up by the ASB. So you have multiple levels of help. Please make use of it. Whenever even in a 1% doubt, don't make use of your interpretation. 2 heads are better than 1. Please make use of it, which is freely available and for your help. And the most important rule is, which I've said, is have the courage of conviction to call a spade a spade. Please don't succumb to the pressure of time and somebody saying to sign it if the details are not available, and you have amply had the audit trail for the fact that these details have not been made available to you. And in case the signing is still to be done, then qualify or disclaim appropriately. And the last rule, the most important rule, is please follow the above 11 rules. So with that, I conclude. Any questions I can take, because I said I'd speak exactly for 90 minutes because as a part of various speakers forums which I've been a part, it's a global understanding that you don't speak for 90 minutes at a stretch. It's too much for somebody to bear.
Yes,
so any questions I can take. Anything which breaks the monotony is fine. So that's where I took a gap every 20 minutes each to break.
Sir,
I've been to Vijayawada as a faculty long back. I remember on the
concurrent
as a
audit.
faculty for the concurrent audit course, certification course on concurrent audit of banks.
Yes, sir. Yes, sir.
And at times I was given, which is not fair, that I have spoken in certain sessions for the entire day. And this I'm talking when the course was launched initially. I was one of the earlier faculties who had actually developed this course. I'm not speaking much on that now due to some other commitments, but it's you can't physically now speak for more than unless it's a workshop. Virtually, you can't hold anybody's attention, even if you make any live activities or something.
Yes, sir. They have the liberty to.
Any questions? I'm willing to take. You can shoot. I can answer anything.
Sir, one question from my side, if you permit.
Yeah.
We have this emphasis of matter paragraph in the audit report, bank audit report.
Yes.
Sir, can you give some 1 or 2 illustrations of what can be included in that para, sir?
So, theoretically, I'm talking theoretically, right? I don't know whether in a bank branch audit you will get an opportunity to issue an emphasis of matter. But please remember one thing, the qualification is a qualification. Emphasis of matter and other matters paragraphs are not qualifications. Emphasis of matter is a particular note which you want to highlight, which is there in the notes to accounts, which is a very material note, but at the same time, it's not a qualification. So last year, let's say, emphasis of matter, if you see, was given on the fact that COVID made these and these were the things which we did. The bank itself put a note. If this is what they did, work from home and all those stuff which was there, the bank gave a note. And the auditors picked up that note and gave an emphasis of matter, because for the reader, if there are 100 notes, the key note should not get lost. So you give an emphasis of matter on a note which you want to highlight. If it's a point of qualification, you qualify, because it will impact the accounts. The emphasis of matter note will not impact your account. It's something which you just want to highlight. And other matters is something which you are basically putting, which is not there in the notes. So if you want to state something, so something like you have reviewed an account for the going concern. You're still not qualifying it for the going concern, but you have examined it for the going concern. There is no note which is put by the management. It could be a CAM, but it can also come where a CAM is not mandatory. It can come in the other matters. So the difference between other matters and emphasis of matter and a qualificationary note, audit qualification, is that an audit qualification will directly impact your accounts and your true and fair view. And other matters paragraph is something which is given in the note, but that note, so something like, let's say the bank has made huge sales to ARCs. Now it's legally permitted, it's done. You are highlighting the fact that maybe 1,000 crores worth of assets have been sold to ARCs, that is 5% of the advances of the bank, and that has reduced the gross NPA. It's not some great miracle which has happened, which has reduced the NPA. It's not due to any recovery, but it's because of the fact that maybe they have written off certain accounts or they have sold it to ARCs. So the note will be there as a disclosure note, but you are giving an emphasis of that note because you want to highlight it and the impact it has on the accounts. So if there is a change in there, they have revalued their fixed assets. The note is there. But you'll still need, you can give an emphasis if because the revaluation reserve is accounting for the major reserve. Suddenly your reserves have shot up by 1,000 crores because they have done an entire reval. So that's not a qualification because it's legally permitted, but you'll still need to highlight it. So in the emphasis of matter, you will highlight something which is already there in the note. In an other matter, you will highlight something which is not there in the note. So what you did as a part of the COVID last year, most of the auditors gave another matter note. COVID happened, we couldn't physically verify, we did this, we followed the guidance note issued by the institute and all. We told that. That was in the other matters paragraph. Fine?
Right, sir. Thank you. Very comprehensively answered.
Yeah,
and we understood as to what is a qualification, what to be recorded in the emphasis of matter and other matters also.
Yeah, so this was something big. When I was a junior, I was also confused. So when fundamentally I am clear, I said, let me simply explain, because this was an issue which was disturbing me also earlier. I never used to know the distinction. It's very simple once you know it.
Yes, sir. Yes, sir. That's great. So I think I'm afraid we do not have any more queries.
Thank you.
Thank you very much, sir, for making out your time and reaching to Vijayawada for the first time virtually. Of course, you are physically at Vijayawada for the concurrent audit course. So thank you very much. And you have answered many of our queries also very patiently. We hope that we will continue this partnership in the future also on other topics as well. So
and
friends,
I hope I added value, right? Because you know,
definitely,
the audience has given his valuable time. So anyone wants to have my phone number, I can put it on the chat.
Yes. Also, in the meantime, a programming note of tomorrow's session. Tomorrow's session will be dealt by CAV Ravindran sir from Chennai, I suppose, and he will be dealing on the topics of NPA as well as memorandum of changes, and also a practical approach to the bank branch audit. So friends, hope you will be joining tomorrow at 5 p.m. sharp. The seminar will be commencing, or the session will commence exactly at 5 p.m. Thanks for joining today. Have a great night, nice day, good night for today. Thank you.